Here we go quickly. Let's go through the round, kind of see what happened. It was interesting. One of those rounds you kind of processed and said, "Oh, that could be neat." The two teams that have been kind of leading the way, Digby and Erie, once again did really well when it comes to sales. The top 1 and 2, but just above sales, we also note that they had emergency loans. Oops. Each of those teams had emergency loans. So while they had the first and second best ROEs, they also each had emergency loans, big enough that it's certainly going to cost them points when we get down to process that. So Digby leading the way, good sales though, good profits. What's that? 43 million in profit that round. I'm just kind of doing the quick math. Yeah, that's more than all the other teams put together. Yeah, it would be. Yeah, more than all the. Well, Eric, you don't have to get. Jeez. Of course, the extent of the profit's just one thing, right? I'm concerned about earnings per share. I'm concerned about ROE, other things too. A little bit surprising, we've actually seen a pullback in the contribution margins. If you looked at all the teams, I think if we went back a round or two, just about every team was over 40%. That would tell me maybe at first glance that is it getting competitive? Have we gotten a little bit more competitive? Are some teams lowering some prices to try to increase their sales, increase their market share? Maybe. I don't know that for sure. Certainly at this point, I wouldn't think that the material and labor costs are going up. They're probably coming down. And so if I'm guessing anything, it's that we've seen some decreases in prices as teams try to become more competitive and maybe take on some market share. Maybe a screw your neighbor type of thing too. That can happen sometimes in this game. I don't know if that's what happened here or not. SG&A to sales, those are actually, for this point in the game, also fairly high. I'm used to seeing kind of single digits. Every game takes on its own persona, though, and I've seen it even higher than this at times at the end of the game. I've seen teams really, really push in games that we've had in the past, really, really push the marketing side of things and have it even higher. So, normally maybe a little lower, but sometimes higher. So, stock market, I think we're seeing more teams get a little bit aggressive in buying back, especially the Chester, Digby, Erie. Looks like they all maybe participated in some stock buybacks, but Erie, Chester, stock price went down a little bit. Baldwin had a nice jump. Look at that. Went from $1 up to $10. So actually this past year as a percentage, if I'd have been a shareholder, that would have been the one to have. You could have bought 100,000 shares for $100,000, and now all of a sudden you'd have over $1 million. That'd be a nice change in 1 year, wouldn't it? Believe me, that does not happen real often in real life, so But that would have been a nice change. So we see bonds. We got 3 teams now that would have investment grade bonds, right? BBB rating or better. Okay. We're seeing the prices of bonds have come down. Okay, anything that's below 100 here means the prices have gone down. What's that mean? What's happened to rates then? Rates have gone up then, right? Yep. If prices go down, rates go up. Prime rate 10.5. If we went to last year, I'd almost bet that the prime rate was something less than that. So. And rates tend to go up. Remember, we were kind of in a recession here. Rates tend to come down during recessions. They tend to go up as the economy is recovering. We're just now in real life starting to see a little bit of a bump up in interest rates this past year. Cash flow things, I almost thought too, based on what was up there, that I would have seen some huge changes in dollars because of inventory, but really not that dramatic. Digby actually sold off a little extra inventory. Erie and Ferris kind of accumulated inventory. Not a lot going on otherwise. Okay, and even that's not huge amounts. Okay, with the emergency loans, I really kind of expected to see Digby and Erie both have a lot of inventory on hand, but that's not not so much. I mean, some inventory. Certainly, this could be enough. Would have been enough to offset Erie's emergency loan. Had they sold out all of that inventory. Boy, that's getting it pretty close. I'm guessing there were some other reasons maybe that they ended up with that emergency loan. Dividends. So we got some teams paying some big dividends. Again, that does tend to attract investors to a certain extent, so it might have a positive impact on your stock price. More importantly, it does reduce your equity, right, and allows you to have a bigger ROE. Sale purchase, no sale of common stock other than Andrews. Why, I have no idea. They got plenty of cash on hand, but oh well. Purchase of common stock, we see some teams buying back common stock. This is just an FYI. It's late enough in the game that, in a game like this, I would never, ever, ever sell stock except, maybe in the first round. If I were playing this game, maybe in the first round. If I were to have done it in the first round, I would have only if I were going to invest really, really aggressively in something like automation, perhaps. That'd be about the only reason I'd sell stock, and I'd only do it in the first round. I'd spend the rest of my time buying back stock. Would I borrow money to buy back stock? Oh, hell yeah. Oh, hell yeah. And the reason for that is that I got a bigger growth rate than what my cost of money is, what my interest rate is typically. Even if it's not bigger, keep in mind that my growth rate compounds. My cost of money is going to stay the same. So I would borrow money definitely to buy back stock if I had that opportunity. Would I borrow money to pay a dividend? I might do that too in certain circumstances. We're seeing public companies, real public companies, actually they do borrow money to pay dividends. That has more to do with the U.S. tax or tax policies. We got a lot of companies, real companies, that have all kinds of money sitting overseas. If they bring it back, they got to pay a huge tax, and so they leave it overseas. Apple's estimated to have about $250 billion that's just sitting overseas. Yet Apple pays a pretty good dividend. And they may actually, I think they're still generating enough cash locally that they can go ahead and pay dividends. But I've seen Microsoft and I've seen some other companies that have actually borrowed money to pay dividends. And they got the cash, but it's just sitting overseas. It's just way cheaper to borrow the money. You get to borrow the money, deduct the interest, versus bringing money home and paying a 35% tax rate. Yeah, doesn't make a lot of sense, right? Anything else exciting there? Not terribly. Cash, as we see above, we saw the emergency loans with Digby and Erie, so they got no cash. Lots of cash otherwise, quite a bit. Ferris, Baldwin, and Andrews all have quite a bit of cash. Chester probably did the best job of cash management. $14 million positive, that's good. Accounts receivable, inventory, not huge amounts for this stage of the game. You could argue that those are pretty big, but they're not huge for this stage of the game. About, for Digby's case, a little less than 10% of sales, a little more than 10% of sales there. You'd probably want it to be a little bit lower. Our equity positions, interestingly, Team Digby's got double the equity of a Team Ferris, for example. Look at Team Baldwin. They're down to $36 million in equity, so less than 1/4 the size. And Baldwin made a little bit of money, right? So they had a reasonable ROE. Was it 7% up there, if I remember right? I went back up and looked at that. I think it was 7% or something. So you could go small, and who knows? Maybe next round, if they could double their income, which wouldn't be that difficult. What was their ROE? 4.3. It's Chester that had 7%, I'm sorry. And that's on making a profit of just $1.6 million, right? So, they wouldn't have to bump their profit up a whole heck of a lot to actually have an ROE that'd be comparable to Digby's and Erie's. Especially if they started taking some business away from Digby and Erie. Still, this is a little bit unusual from my experience in the past. Still lots of capacity. Now, I would argue Andrews and Ferris have a lot of capacity, or two computer teams. That's a little bit unusual for them. Baldwin and Chester, just all kinds of capacity compared to what their sales are. Um, again, that capacity is really expensive. It's not easy to put a pencil to that and calculate the expense that is. I'm not going to say it's hidden expense. You could figure it out, okay, looking at your own annual reports and whatnot. But it's really expensive to have that excess capacity as opposed to paying overtime. It's way cheaper to pay overtime. Okay? I know I've kind of hinted around about that through the semester, but way, way, way cheaper to pay overtime than it is to have this excess capacity. Okay, that's probably why you're seeing Digby and Erie seeming to do better profits, those types of things. They're actually using their capacity, right? They got the buildings there, they're putting them to use. Okay, if you're not going to use the capacity, if you don't think you can generate that sales, it would make a lot of sense to just unload the capacity then, right? And it would have way earlier in the game too, probably. So, we're seeing some inventories here. Yeah, look at that. Erie looks like they kind of took a guess and guessed wrong on their traditional products. So between those two, really, they actually have quite a bit of inventory on hand. Those are the two that kind of stand out. Ferris did a nice job there, just a little bit here and there. Digby, a little bit of inventory here and there. Sold out of their low-end one. It's interesting. This is a case, when I was comparing Dell to Ebb this morning, kind of wondering why Dell sold so much better than Ebb. If you look at Ebb here, it's actually cheaper, price being the number one concern, right? $17.50 versus $17.75. This is one of those I scratched my head at a little bit. Still am a little. So you'd have thought Ebb would have been better price-wise, and it would have. Sometimes you got to come down then to this, take a look, and even this doesn't, I don't think, tell me the full story. Age, however, is the second biggest one. Okay, the price isn't that much of a difference, a little over 1%, right? Age is a huge difference, right? And age, is the second most important. MTBF also is a, little bit of importance, and certainly Dell had a better MTBF than did Ebb. And marketing, flop those, it's just about the same. Actually, Ebb spent a little bit more money on marketing than did Dell. And so I'm still scratching my head a little bit. I think the answer in this case might be here, that Ebb's product, when you take a look at everything, this was year-end stuff. It actually revised, though, middle of the year here. Okay, revised in June. And so while we're looking at this as end-of-the-year stuff, Ebb might have been a little further out of whack, okay, and it just updated then in the middle of the year. And maybe it was a big change, I don't know. So maybe Ebb was, falling off the end of the earth or something, and then this brought it back into norm. I'm not sure. I'd have to go back last year and kind of see where it was at. So that's kind of my guess, is that in this case it might have been kind of a revision date thing. Little discrepancy there. Baldwin gave up quite a bit. There in the low end. 17, about 10% of the market share, looks like. So, 10%, $1.3 million, $1.4 million additional you could have sold for $20. So, $28 million. Might have been enough to give you the highest ROE based on your equity and stuff. It's possible. Huh?
We just wanted the last.
You're saving up? Okay. Gotcha. Your whole focus this semester has been you're just for the eighth competitive round. Not a lot going on there in the high end, right? And differences. We see it's kind of down to the 3 or 4 competitors in all these high end categories, and they're getting just about exactly what they should be getting. So pretty good disbursement here. I mean, these things are pretty well. These two are kind of caught in the middle. Probably not selling as much as folks would like them to sell. This product of Andrews is probably going to be right there in the traditional. It's probably going to be in pretty good shape this next round. Cat as well is going to be in good shape this next round in that traditional segment. But it is oftentimes when they're going from the one segment to the other, it's difficult to get a good contribution margin. Their expenses are just naturally higher. It's oftentimes difficult. You could say that, but you're also saving a lot of money in R&D because you're not having to spend money on R&D. So it's a little bit of a toss-up. Yeah, we're getting some good numbers here. 125, 120, 124. TQM, we probably didn't see a ton spent on TQM. As we get towards the end, it kind of, law of diminishing returns does kind of set in. Not saying that you won't still get some improvement, but the improvement starts to really level out. But we see pretty good full investment all along here. Erie kind of fell by the wayside a little bit. They kind of gave up quite a bit. I thought at one time they might be able to get their labor costs on their low end down under $1, but probably here it'd be difficult. Well, going to the last round would be about impossible, but they might have. Excuse me. Had they pushed this a little bit harder. I should do it. So who do you think won? Let me throw out this other thing. Team Digby had not just one deduction, but 2 deductions. I'll show you where the other one's at. Working capital needs to be at 20 million. Current assets for Digby 42. Current debt, accounts payable about 25. Yeah, about 25. A little more than 25, so that's only about 17 million in, I'm sorry, working capital. Did I say working capital? It's only about 17, 18 million. It needs to be at 20 million, so Digby gets dinged twice. Huh. So who do you think won? Well, let's take a look. Guys don't care. Man. Nobody emailed me and reminded me to process the round. I tell you. It's like suspense, waiting for this thing to come up. Holy cow. I'm not doing this on purpose. Wow. Wow. Anybody got any good jokes to tell? Huh? Am I serious? Yeah.
You could post 7.
Well, yeah. Okay, I'll go ahead and try to go to work on that. I'll pause this. There's